65% of entrepreneurs who fail in business for reasons other than personal circumstances fail because of financial mismanagement. If you want to run a successful business, you need to understand the financial side of it. And that is what we will discuss in this video. Hello and welcome to the Savvy Corner. I'm Alisa, and on this channel I talk about managing your money, your business, and your mind around it. I am a financial and business coach with a background in accountancy and business analysis, so numbers and finance skills come naturally to me. But that is not the case for everyone, which is why some business owners decide to delegate this area of their business. However, whether you choose to manage your own finances or not, lack of financial awareness will always be a blind spot when it comes to making decisions in your business. In this video, I share some financial implications that you need to be aware of as a coach, consultant, or other service-based business owner, no matter who deals with the finances in your business. Let's jump straight in. The first thing I want to point out is especially relevant for people who are just starting out their entrepreneurial journey, and that is revenue fluctuations, also known as peaks and troughs. Until your business becomes more stable, and depending on your business model, you can expect to have months when you'll be making more money and months when you will make less. If you are still employed, it's a good idea not to leave your job until you have built a financial cushion that covers between 3 to 6 months of expenses, so you can navigate these periods of lower revenue. I talk more about when to quit your job in order to focus full-time on your business in this video. If building a financial cushion beforehand is not an option for you, then diversifying your income and not relying on one single source of money is something I strongly recommend. I have identified 15 sources of income for coaches in this video, but they can easily apply to consultants and other similar professionals. All the videos I mention will also be linked in the description box below. Once you level out the revenue fluctuations, it's important to keep an eye on your cash flow position. Even profitable businesses can go bust because of cash flow problems. As the name would suggest, cash flow represents the amount of cash that flows into and out of the business. Having a positive cash flow position means that your business is adding to its cash reserves, i.e. you have liquid money in your business, therefore allowing you to reinvest in it, pay out money to shareholders if you have any, or settle future financial obligations. And this is super important, as we'll see later in the video. If you find that your cash flow position is not great, one way to improve it is to revise your payment terms. How much time do you allow your customers to pay you? As a coach or consultant, you could be charging for the majority, if not all, of your fees in advance. This means you don't have to chase for unpaid invoices, and you reduce the chances of bad debts. A bad debt is when you have to write off a sum of money someone owes you because they're not going to pay. A healthy cash flow position is also extremely important when it comes to paying your tax bill. Imagine your business doing really well in terms of revenue generated. That comes with a proportional tax bill. And if you don't have the cash to pay for that bill, your business's existence could be threatened. If you're already working with a good accountant, then they might have already advised you to set aside money regularly in order to pay for taxes. If that's not the case, or you are managing your own business finances, I have a video where I share how I manage my finances in my business, and I talk more about saving for tax. The video also contains a link to a checklist you can download if you'd like to follow along with everything that I do to manage my finances on a weekly, monthly, quarterly, and yearly basis. You don't have to do everything that I do, but it's good practice to implement some of it. You know what I find to be good practice on YouTube? To like a video and subscribe if you're enjoying someone's content. If that's the case for you in my videos, I would really appreciate your support. As I said at the beginning of the video, even if you delegate the finance management in your business, you need to have a basic understanding of your numbers, otherwise you will always have a blind spot when making decisions. I'm not talking about performing complicated calculations or anything like that, but you need to understand how your business model works. What is driving revenue? How many customers you need in order to break even? What is your profit margin? Whether your prices allow you to meet your revenue goals given the business model you've chosen. What is your conversion rate? Your cost per acquisition if you're using paid ads in your business, and so on. Having a good understanding of what is the story that the numbers in your business tell you will put you in a much better position to make decisions. And make no mistake, any decision you make will have a direct or indirect financial implication on your business. Let's say you decide to switch from one-to-one services to online courses. It's likely that your client acquisition methods will change. Your conversion rate will probably go down, and so will your prices. However, the volume of sales transactions you'll need to make to maintain the same revenue will increase, and therefore so will your costs. If your revenue stays the same but your costs increase, your profit will decrease. Can you see the financial implications of the decision to tweak your business model? This is obviously a bigger subject, but I have lots of videos on my channel that cover parts of it. I suggest you start with the 2 videos I filmed on money mistakes to avoid as a business owner, which I will link for you on the screen and in the description box below. Once you understand your numbers, you will probably start to notice some things that you didn't think of before. One of them might be that in order to be in the same position financially as you were as an employee, your business revenue needs to be higher than your salary was. First of all, because you now have business expenses that you need to account for, but also because you'll need to cover for things like health insurance and pension. Employees usually have health insurance provided by their employer, and depending on your circumstances and where you're based geographically, some employers make pension contributions for their employees. As a business owner, you cannot rely on those contributions anymore or on other benefits you received as an employee. That means that in order to be in the same financial position as that of being employed, your business needs to generate more money compared to your previous salary. If that scares you or you think it's going to be hard or impossible, you need to look at your relationship with money. You can have a great understanding of the financial side of your business, but that won't be enough to make you successful. You also need to understand yourself, how you view and treat money, what you think is possible for you financially, how you feel about having money conversations, about setting your prices, and the value that your business offers to potential customers. Especially if you are a solopreneur or the owner of a very small business, everything you do and think will reflect on your business. Your money mindset plays a huge role in the financial success of your business, and I invite you to reflect on that and work on it if you have to. If you'd like us to work together on your money mindset and your business, please get in touch. I will leave the link to my diary in the description box below. I hope you enjoyed today's video, and if you did, check out these other 2 that are suggested on the screen right now. That's it from me for now. Thank you so much for watching. I'll see you in the next one. Bye!